Good afternoon, everyone. We're back in Las Vegas, in our office, that is, and SMF Pro Trading students are live in the trading room. And we've got everything set up. And we're going to talk about standard pivot lines that get broke. And this is the opening bell over here. And basically, the stock makes a high. And what I want people to see in this chart is that this was the opening where the most volatility is. And there was limit orders out. And we started to come down like we normally would. And we were approaching, we had given limit orders out to buy below the market naturally. Because we weren't buying up here, that's for sure. And what happens is that these are standard pivot lines where stock market orders can get taken out. Right here, if you have a limit order, or price is up here, and you have a limit order out down here, you keep your limit order out there because that's a major pivot that the standard public looks at and what people make decisions on. And basically, when it's red or it's starting to drop rapidly, that was quite a little drop, but then it starts to drop again in price. Say it drops 30, 40 pennies out of nowhere. If you have a red bar at that pivot, you got to cancel the order. And if you do get hit on a red bar, you must get that stop market in right below it. Because what happened is when this thing, if you don't have the stop market order right below it, right here, what will happen is they'll print through you. And when they break that major pivot, stop market orders get triggered, down goes the stock. And when you want to short a stock, I will do another videotape on how to short the same move. Let's keep this videotape simple. That cancel all on red bar, stop market no matter what right below it. If it starts to go down here and you haven't been stopped, you have to take it because you didn't bounce off of there on positive volume. You must take the stop down here. That's the rule. Other thing is MACD started to go down, and we will talk about in a different videotape on how you can short the move. And when you got bounces, the Pro Trader bar, half of the last Pro Trader bar, which is right here, could not get a move above here, which means that with this half Pro Trader bar, that's resistance no matter what. And if you can't close above it with a green bar like that and hold a new support level to get another breakout, well, that means you're going to go down. And we would tell you how to short that based on half of that pro trading bar and where you would buy to cover your short using the SMF Pro Trader bar. And the rule is that when something starts to drop fast, stop market orders get triggered. And it wasn't until, all the way down here, and basically you went down to here, you went all the way down. But that pivot was broke, and that stop market here, and if you don't take the stop right away, you don't have the option, or you got to come out. You never know if you're going to end up like this or not. The only way you can avoid it is by executing out with the stop and or canceling the order. Get out of the way. Same thing on options, because you're buying well below the marketplace, because you are. And too much selling down, you got to cancel all. And this thing, we will talk about other tapes on how to short, not in this tape. I want you to know, pivot point, sell through, it didn't stop here either. That's the first one with the red bar. Here's the first pivot. Break. Didn't stop. We got here, it went below it. Sometimes they'll keep going, but this one, all it did was pop back up before it made that lower low. And here's the next drop right there. And you're going to learn this in your shorting examples of that pivot and the failure to get above it and selling short. And you can go sideways before you make the next move down. Okay, look at that. Bam. Break the pivot. We'll do another tape. But if you had a limit order out to buy And you get, number one, you cancel it. It's not a green bar, it's red. Don't buy at support on red bars. Let them bounce up and prove themselves like this. You can always go in the second bar or first bar, but let them prove themselves. So don't buy green bar at major pivot support. When they break through it, well, we'll talk about how to short these, okay? So that you know. The thing about this tape is you got to take the stop. Here, it broke through, but then it had the counter trend. So what? You still got to take the stop because this happens. Bam. You don't get lucky to get that bounce. A lot of times. They print right through here. And you got to take the stop. You have to. And we'll work on it. Here, we'll work on tapes on how to take the SMF Pro Trader bar short. That means that this distribution bar made the high, and when I break half below the previous bar on negative red volume, this is a short. And you're going to learn that in some other tapes. And that's going to become resistance. You would have to close above here on a green bar above here to cover out. But hey, when they start, you know, stop markets get triggered, and that also we'll do that in our short selling video. And the three characteristics about, you know, these little pop-ups and then they go lower in the trends and what all that means. So basically, the whole tape here was about pivots and about getting out of the way. And in next tapes, we'll talk about how to short breaking major support levels.